Welcome back to the channel, everyone. Today I want to talk about the unbelievable amount of APE FTDs and how it's just exposed the clear manipulation. And I also want to talk about what Adam Aron is going to do about it. So stay tuned and let's make some money. And I want to dive straight in with the key information. So, Spence tweeted saying there was over 40 million APE FTDs on August the 24th. Adam Aron, this is pure fraud. Our price was manipulated down by intentional FTDs. He said this is a clear violation of Regulation SHO Rule 204-10B-21. The New York Stock Exchange should be embarrassed. So let's talk about the number of FTDs we saw in the second half of August, why this is important, and how it exposes the clear manipulation. On the 24th of August, the day of release, we saw a whopping 43.4 million FTDs. The day after, on the 25th, we saw a consistent 38.6 million. Again, the day after, on the 26th, that dropped to 24 million. The 29th, 11 million, and consistently 5 million then on, every single day. Now, I think it's important that we don't add these consecutive FTDs together. For example, you don't add 43.4 million to 38.6 million, totaling 80 million FTDs. These aren't necessarily new FTDs on top of the FTDs from the day before. These are just separate FTDs. For example, there wasn't 43 million FTDs on the 24th and then a separate 38 million FTDs in addition to the 43 the day after. There was just a separate 38 million FTDs. Many of these FTDs could have been the same FTDs from the day before, just 5 million less. But while I think it's important not to add these FTDs together, it is important to look at this FTD data collectively and look at just how many consistent FTDs we've seen. What this data is showing is these FTDs are consistent, they're concurrent, they're consecutive, and it's a clear sign of manipulation by these, that was close, by these crooks is what I meant to say. Now, it's very important these FTDs were consistent and they were consecutive, and why it's important is because Adam Aron has previously met with the New York Stock Exchange and has previously covered issues on the AMC FTDs during the 2022 annual shareholder meeting. Now, Adam Aron contacted the New York Stock Exchange about the AMC FTDs, and I'm guessing what they said is because the AMC FTDs weren't consistent, they weren't concurrent, and they weren't consecutive, it's not a clear sign of manipulation of intentional FTDs. But now Adam Aron has the proof that these short sellers have been consistently, consecutively, and concurrently manipulating the market and creating these FTDs intentionally. It now gives Adam Aron that factual proof to go to the NYSE and do something about it. Froggy Styles tweeted the other day saying APE was intended to give a share count. Once it's proven there are more owned shares than allowed, Adam Aron will not need to dilute APE to pay off the debt. He will be able to go on the offense and take money from all of the brokers for what they've done to APE and AMC. He would have verifiable proof. Ross said, but it's likely been proven a couple of times over. Surely he's just being a soft CEO and doing a lot of talk when the legal team should have acted days or weeks ago. But Froggy said sometimes when criminal acts are being done, you have to let them do it to catch them with that verifiable proof. Only facts are usable in court. I think the proof is coming. We see it plain as day. Now, obviously that was tweeted before these consistent, consecutive and concurrent manipulative FTDs were revealed, and now Adam Aron has that justifiable proof. Adam Aron has allowed these market makers to continue manipulating AMC and APE, but now he has this justifiable proof to do something about it in court. I am personally very, very excited to see what the next stage of Adam Aron's pounce actually is going to be, now that he has this verifiable proof of consistent and consecutive manipulation and excessive FTDs. I wonder if Adam Aron is going to somehow team up with the SEC, the FBI, Homeland Security and the Department of Justice to set a trap for these short sellers to cause the squeeze and to make a large amount of arrests. But what I do know is that Adam Aron now finally has firm proof that synthetic shares absolutely exist, with a significant number of FTDs for no apparent reason when the stock was newly issued. Guys, if you haven't already, be sure to sign up to Moomoo right now using the link in the description below. You can currently get 13 free stocks worth up to a whopping $26,000, which is the most free stocks that Moomoo has ever given away. Moomoo is very customizable, it's incredibly easy to use, there's tons of technical indicators and advanced charting tools. From Moomoo's latest customer agreement, they officially state they do not sell your order flow to market makers like Citadel, and therefore Moomoo is brilliant for buying those AMC, those APE and those GameStop shares. Now you may be saying, hang on Tom, I thought we were going to see 100 million FTDs, maybe 200 million, or maybe even 300 million. Why is 43 million FTDs still important? Because it's not as high as I was expecting. But now if we cast our mind back to the start of January, back on the 8th of January, we saw 11 million FTDs. On the 20th, we saw 13 million. And on the 27th of January, just before the big run up, we only saw 27 million FTDs. Now again in June, on the 1st, 2nd, 3rd and 4th of June, we only saw 1.7 million, 1.2 million and 5.4 million AMC FTDs on a single day. Again, back recently in March, we only saw 9 million AMC FTDs, and therefore to see 43 million whopping FTDs on a single day, that's more than we've ever seen in AMC's history. 43 million FTDs is nearly double the amount of FTDs that caused the January run-up when we only saw 27 million failed to delivers. So even though 43 million isn't 100 million FTDs or it isn't 200 million FTDs, it's still double the amount of FTDs we've ever seen before and that's ever previously caused AMC to run. Again, this just shows how much these shorts have doubled, tripled and quadrupled down over the last year and a half, over the last 2 years, and that's exactly why the shorts are in even more trouble and why we're approaching ever closer to the squeeze. If we only saw a few 100,000 FTDs or maybe even tens of thousand FTDs, we'd know there was no manipulation taking place. But the fact that we're seeing double the amount of FTDs from January of 2021, it's plain as day and it's justifiable proof for Adam Aron. And again, it's not just a large one-off day of FTDs. We didn't see 43 million and then 10,000, 20,000, 5,000 and 2,000 FTDs. We've seen consistent, consecutive and concurrent FTDs on a whopping scale. And as Stock Savior tweeted, he said 49 million FTDs on a stock that has no options chain and on a stock that's only just been released. Realistically, there shouldn't be a single FTD. And he said they have not delivered fully. There really shouldn't be any FTDs if it was all legit. If there wasn't any synthetics, if there wasn't any IOUs, and if there wasn't any swaps, then surely 516 million shares deserves 516 million shares, right? So why is there any FTDs? As Robert tweeted, he said the naysayers and pundits told us that glitches don't exist in the market. Now it's glitch town, left and right, and the glitches are normal. So which is it? But I also want to go on further and say previously, when these glitches in AMC were appearing, they were corrected the very same day or the very next day by these market makers, by these brokers, and by these trading platforms. Previously, if an error was spotted in the flow or the outstanding shares or the number of shares shorted or the short interest percentage, it was corrected the very same day by Ortex or by any of these data providers like Yahoo. But right now we're seeing platforms like Chart Exchange publishing data for APE of 703 million shares outstanding and then checking and double checking their numbers with IEX Cloud and coming up with 694 million outstanding. We're also seeing platforms like Yahoo checking and double checking and triple checking their data every single day, but still reporting a short interest of over 400% for over 10 days in a row now. These trading platforms, these market makers, these brokers and these data providers are now checking, they're double checking, triple checking and quadruple checking their data, but they're still reporting wildly manipulated figures. These glitches are no longer being passed off as mistakes and corrected the same day or the day after. They're now being touted as absolute truth, saying there is absolutely 694 million APE shares, way over the float that was issued by Adam Aron, but we're sure it's correct. So no longer do these glitches not even exist, they're now being checked, double checked and triple checked and reported as absolute truth because these trading platforms, these data providers, these market makers and these brokers simply don't know what the real figure actually is. As Kareem tweeted, he said all of the derivatives that should have been reported in US markets have now been moved to EU subsidiaries to avoid making those reports. Many of these EU countries don't have the same regulations and reporting requirements as the US does, and therefore many of these market makers and hedge funds are moving their derivatives from their US company into their EU subsidiaries. Now this is obviously to hide their manipulation, but it also hides just how over-leveraged these hedge funds and these market makers really are. And as Kareem said, when EU financials explode, it will be because of that and it will backfire. It's just a matter of time and no one is safe. Similar to 2008, when the music stops and when these derivatives end up blowing up, it will take out many of these hedge funds, many of these market makers, and many of these major institutions and major banks. And on that note, as Gold Telegraph tweeted, they said, breaking news. The World Bank is warning that leading central banks risk sending the global economy into a devastating recession next year if policymakers raise interest rates too high in the months ahead. These interest rates are increasing and it is slowly destroying these major institutions and major banks, and it won't be long until these derivatives and these credit default swaps end up blowing up and taking out some massive institutions alongside. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.